Hey friends, welcome to today's Singapore Market Digest. I'm Iggy from the Investing Iguana, and today we're looking at some interesting movements in the Singapore market. Let's dive right into some key stocks making headlines today, starting with Semcorp Industries, one of Singapore's leading energy and urban solutions providers. Semcorp Industries, trading under the ticker U96 on the Singapore Exchange, closed at 6.15 yesterday, dropping 0.05 or 0.8% before a significant announcement hit the market. The stock is currently trading just below its 52-week high of $6.45, which it reached earlier this month on March 6th, with a market cap of about $10.65 billion and a PE ratio of 10.47. Sembcorp remains one of the heavyweight stocks on the SGX. Some background for those who might be new to this company. Semcorp Industries was formed back in 1998 through the merger of Singapore Technologies Industrial Corporation and Sembawang Corporation. Since then, it has evolved into a leading energy and urban solutions provider with a balanced energy portfolio exceeding 15 DW globally, including more than 5.7 DW of renewable energy capacity across solar, wind, and energy storage solutions. The big news today is that Sembcorp has partnered with Sarawak Energy and Italian subsea cable maker Prismian for an ambitious hydropower project. This collaboration aims to supply Singapore with 1 gigawatt of green electricity from Malaysia's Sarawak state. The deal also involves SP Power Interconnect, a subsidiary of Singapore's state-owned utilities company, SP Group, as a technical partner. This potential import of green electricity is still subject to regulatory approvals, but it represents a significant step in Sembcorp's renewable energy strategy. This latest partnership follows a string of green energy initiatives by Sembcorp. Just recently, the company signed a deal for a hydrogen pipeline linking Indonesia and Singapore and is developing what could become Southeast Asia's largest green hydrogen project, with PTPLN boasting a production capacity of 100,000 metric tons yearly. They've also been expanding their solar portfolio, recently plugging in an 18 MW solar farm at PSA's Keppel Terminal, the first short-term mobile solar project at the terminal. Looking at Sembcorp's financial performance, the company delivered a resilient net profit of $1.02 billion for the full year of 2024, comparable to FY 2023, despite a planned major maintenance in the first half of 2024. Their second half performance was particularly strong, with net profit before exceptional items and discontinued operation at $487 million, 17% higher than the same period in 2023. This growth was mainly driven by higher earnings in their gas and related services and integrated urban solutions segments. The company has also increased its dividend in line with earnings visibility, with a 77% increase in full-year dividend to 23.0 cents per share. Based on the current share price, this translates to a dividend yield of about 3.86%, which is quite attractive in the current market environment. Trading volume for Sembcorp has been robust, with an average daily volume of about 4.75 million shares. This indicates strong investor interest in the stock, likely due to its stable earnings, growing renewable energy portfolio, and attractive dividend yield. Looking ahead, analysts seem bullish on Sembcorp's prospects. The consensus target price is around $7.05, representing an upside potential of about 14% from current levels. This optimism is likely fueled by Sembcorp's strong positioning in the renewable energy space and its strategic acquisitions, such as the 30% interest in Sarawak Energy completed in November 2024. I've created a deep dive video on Sembcorp, so please watch it if you are interested to find out more. Now let's shift our focus to Thomson Medical Group, trading under the ticker A50 on the SGX. The stock closed flat yesterday at $0.41, which is near its 52-week low of $0.41, reached just a few days ago on March 11th. This represents a significant decline from its 52-week high of $0.57 set in April 2024. For those unfamiliar with Thomson Medical, it's one of the leading healthcare players in Southeast Asia, with operations across Singapore, Malaysia, and Vietnam. Established in 1979, the company is known for being one of the largest private providers of healthcare services for women and children in Singapore. It owns and operates the iconic Thomson Medical Center and a network of specialist medical clinics offering services in obstetrics, gynecology, pediatrics, and various other specialties. The big news for Thomson Medical is their plan to develop Thomson Hospital Iskandaria, a multi-specialty healthcare institution in Johor. This tertiary hospital will span 1.5 hectares and focus on areas such as oncology, orthopedics, and obstetrics and gynecology. According to Group Chief Executive Melvin Heng, the hospital will have around 300 beds with the capacity to scale up to 400. This healthcare hub has been in the planning stages for some time and is expected to be completed by 2030. This development is part of Thomson Medical's broader expansion strategy. The company already owns a prime 9.23 hectare freehold waterfront land in Johor Bahru's city center, with plans to build an integrated healthcare city to meet the growing healthcare needs in the region. In addition to this major development, Thomson Medical is also expanding its fertility services. The company plans to launch a second fertility center in Singapore in the latter half of 2025, responding to strong local and international demand. This aligns with their established presence in the fertility space, as they already operate the award-winning TMC Fertility Center in Malaysia, which is a leader in assisted reproduction. Looking at Thomson Medical's financial performance, the picture is less rosy than Sembcorp's. The company posted a net loss of $12.6 million in the first half, ended December 31st, 2024, a reversal from its $4.9 million net income a year earlier. This loss was attributed to challenges in the Malaysian market, increased interest expenses after acquiring Far East Medical Vietnam Limited, and the cessation of non-core transitional care facilities in Singapore. The company's valuation metrics reflect these challenges. Thomson Medical has a market cap of about $1.11 billion and a trailing P/E ratio of 2,100, which is extremely high and suggests investors are pricing in future growth rather than current earnings. The company's profit margin stands at just 4.34% with a return on equity of 3.38%. Before we wrap up today's digest, let's take a quick look at Singapore's labor market, which provides important context for our stock analysis. According to the Ministry of Manpower's fourth quarter labor market report released yesterday, Singapore's labor market continued to expand in 2024, supported by strong economic performance and positive business sentiments. The number of employed residents, meaning Singapore citizens and permanent residents, grew by 8,800 in 2024, reversing the decline of 4,600 from the previous year. However, there are some warning signs on the horizon. The report indicated more challenges for the job market in the final quarter of 2024, with quarterly retrenchments ticking up and the year-on-year job vacancy ratio dipping. Looking ahead to 2025, the labor market faces more risks from global uncertainties and trade tensions. This mixed labor market picture has implications for both Sembcorp and Thomson Medical. For Sembcorp, a strong labor market generally means higher energy demand from businesses, which could benefit their core operations. However, potential economic headwinds could impact their growth projections. That wraps up today's Singapore Market Digest. As always, remember that investing involves risk, and it's important to do your own research before making any investment decisions. I'm Iggy from the Investing Iguana, and I'll see you in the next update.